one thing that seems to be a big difference between now and the 1970s is kind of the institutional makeup, especially when it relates to industrial relations, greater bargaining power amongst workers potentially. Is that a factor here as well, that we might not see the same kind of runaway inflation just because workers don't have the same power that they did in the 1970s to drive to drive wage demands?
Yeah, well, certainly in the US, you had a much stronger sort of union movement back then, and then the rise of the gig economy and the like has sort of weakened their ability to negotiate wage growth as a collective. Certainly that will have a part to it, but I think more importantly, it's just that the economy is not going to be allowed to run for as long as what it did back then.
Well, let's get that labour growth chart in the United States, because it really is illustrative. Would you like to just expand on that a little bit further? Because it kind of seems to suggest that there's a pretty clear and secular trend there, and that maybe sort of bodes perhaps poorly for long-term growth prospects. It sort of harks back to me again, that kind of Lawrence Summers argument of secular stagnation, that maybe that trend hasn't necessarily continued and maybe it'll extend itself. What are we looking at here?
Yeah, quite right. So the green line there is your labour force growth in the US per annum, and then the grey line there is just your population growth. So post World War II, you had the baby boomer growth spurt, and then in the late 60s, early 70s, those people are starting to reach their 20s, they're entering the workforce, they're having families buying houses and the like. Their spending patterns go up significantly, and that really drove economic activity during the time. Likewise, you also had greater ability for women to join the workforce, so you got a big increase in labour force participation. Then pretty much from 1980s through to today, we've had the reversal of that. So growth rates have slowed, so population growth is slower. You can only have that big increase in terms of female participation really once, so that's slowed up as well. So what we see going forward into the 2020s is really wage growth that's more around that 0.5% per annum, and that's probably more disinflationary from a demographic point of view rather than inflationary. So central banks will have to do less to keep inflation under control. Where it means in terms of long-term growth, I think there's probably one big change that's come out of the pandemics, in our view, is just the return of fiscal stimulus and the big increase in terms of budgets that you've had. Spending on particularly social elements of budgets are very difficult to take away. We've had a large increase in the NDIS forecast spending. We've got a big amount of spending on defence required. So although growth driven by population or workforce participation will remain to be weak, and so that secular stagnation element, you will have more fiscal spending built in over the forecast.